Section 44AB, it deals with audit of books of account. It is a pure theory. How to remember section 44AB? Audit book. AB refers to audit book, then you can remember automatically audit of books of account. There might a question come in the exam that write a short note on section 44AB. Then you will find you will sit and imagine what is section 44AB. If you remember AB as audit book, then entire theory will be recalled by you all. So it's a shortcut for AB, audit books. If SSC's income exceeds following ceiling limit, then he has to get his books of account audited from a chartered accountant, a CA, having COP. COP stands for Certificate of Practice in India. Ceiling limit is, this is a pure theory. I've just cut short it down for your simple revision. Profession like CA, medical, then cost accountant, etc. These are all professional people. If their income exceeds rupees 25 lakhs, their books need to be audited. For business, normal business, if income exceeds rupees 1 crore, then their books need to be audited. So this is the theory for section 44AB. This much is only the theory. I want you all to please pause the video and copy it down. Then I'll again revise it for you all. I hope you all have copied. See, section 44AB deals with audit of books of account. Who has to audit his books of account? If SSC's income exceeds following ceiling limit, then he has to get his books of account audited from a chartered accountant having COP. COP stands for Certificate of Practice in India. Ceiling limit for professional, that is CA, medical, cost accountant, lawyer, etc. There are many professionals. Income exceeds rupees 25 lakh, their books need to be audited. Business, if income exceeds rupees 1 crore, then let me underline business and profession. If income exceeds rupees 1 crore, then their books need to be audited. This much is only the theory for section 44AB. I hope this much is clear for you all. Now let's start with section 44AD. Presumptive income. What does this presumptive income mean? There are many a times, let me give you a small example. The example goes in this manner. There is an SSC who does not maintain any books of account but has a shop. He is a small grocery shop. He sells good on the daily basis, he purchases good on the daily basis, and he has a final total income on it. So he is carrying out a specified business, not specified business, he is carrying out some business, but he does not maintain any book, not a stock register, not a sales register, not a purchase register. A grocery shop person does not need to maintain all this, because if we keep on maintaining all this, then he might lose his customers who are coming to him. So at the end of the month or at the end of the year, he may write in his book that you might have learned in a single entry that he might write in a book that he has earned a certain income. That certain income can be called as a turnover. Like he has earned the income of rupees 10 lakh. Then on that income, how to pay tax, because he is not carrying out any, like he is not maintaining any books of account. So how to calculate the tax on it is given in this presumptive income. We have to presume the income, that is the turnover, whatever the turnover is, because I am giving you a hypothetical example, because there is no example on this. When you will be solving the sums from the practice manual, that time you will understand. So I hope you all have understood that turnover means a particular income that he has earned, that is say rupees 10 lakhs is the income, total income, or the turnover. So let's see, turnover means usually sales, but at times the sales is also not there and not the purchase is also there. So the profit can be taken as the turnover also, and if the sales are there, then you have to take sales as turnover. Okay, all business other than the transport business, because transport business have another technique of calculation of tax. All business other than transportation business, please underline like this. Now, don't copy now. At the end, when I say to copy, that time I'll copy. See, 8% of turnover. Turnover refers to sale if given. If not given, you can take as the final amount that is given in the question as turnover, less remuneration, etc. to the partners under section 40B. I'll be writing 40B on this page, that time you'll copy. Now don't take tension for that. Here say XX amount less, and you get PGBP income as XXX. Okay, so this much is only there in this section, but when you will be doing sums on this, when I will be solving sums with you all, that time you will understand what is this. So let's go on with section 40B. It was this much only. Please, if you can copy it now, copy it now. Pause the video and copy this much. I hope you all have copied this much. Let's move on to section 40B. It says about remuneration to the partners. Remuneration to the partners. I think I should write it over here rather than writing it over here, because it won't fit over here. So I'll take section 44AE, that is transportation business, presumptive income. Let's complete this here only, presumptive income, right bracket, transportation business. How to calculate? So it is given, I will be writing it over here, up to 10 vehicles rupees 7,500. What is this? I will be letting you know after writing the theory. Whether light or heavy vehicle, less remuneration to the partners under section 40B, and we'll get PGBP income. This is all complete theory part. It has a practical application, but it can be understood while doing the sums only. I can't explain you now. So whatever amount will be coming, it will become PGBP income. There is a note for this. part of the month will be treated as full month. That is example 4 months 7 days, then it will be treated as 5 months. Whether in case of purchase or sales, now it won't get registered in your brains because it is something different. It deals something different. You can understand it while solving the sum. When I will be solving the sum with you all, that time you will understand this. But you need to write this theory because during the exam you have to revise this much part only, then you can recall everything. This was first note. Second, presumptive income will apply only if SSC is not owner of more than 10 vehicles on any day in previous year. So this was the note, up to 10 vehicles. What does this go? How does this go is, if there is an SSC who's carrying on a transportation business, and if he has up to 10 vehicles in a year, then he don't need to maintain the specified books of account. If he has maintained the specified books of account, he can maintain the specified books of account, and he have to file the return by auditing his books and filing the return on 30th September, whatever the year is. And if he does not maintain, then he can follow presumptive income up to 10 vehicles. That is, if more than 10 vehicle in the year, then no presumptive income will be applicable. Like if in April he has 2 vehicles and in March he purchased again 2 vehicles, that means in April he has 2 vehicles and in May he purchased more 2 vehicles. In all, 4 vehicles came from April to the March year end. From April to year end there were 2 vehicles for entire year. From May to the end of the year there were more 2 vehicles. So like that it will be calculated. Okay, you will understand it better when I will solve a sum on this. Now you won't understand, but I still want you all to copy this, because when I will be solving sums with you all, you will understand this. Please pause the video and copy. Section 44B will be taught in the next video. I hope you all have copied this much.